It is truly central bankers gone wild. I want to just give some more examples of how freaking crazy, how freaking insane the policy decisions that these central bankers are continuing to do. And just when you think it cannot get even more ludicrous, just like in a Mel Brooks movie like Spaceballs, where it goes to ludicrous speed, you start to see examples like what's on your screen, where the European Central Bank's balance sheet is up to 75% of nominal GDP. Or the Bank of Canada, Canada's central bank, now owns, in a very short amount of time, 40% of the entire government bond market up in Canada. And unfortunately, you have similar scenarios in New Zealand, Australia, and many of these other countries, whether it's India and others. Their money supply numbers are going crazy. And finally, in the upper right-hand corner of your screen, for Q1 2021, major central bank balance sheets crossed over $25 trillion, and that's on balance sheet. Off balance sheet with the Fed, it's probably even worse, especially with those special purpose vehicles and the currency swap lines with the other central banks. And then 57% of global GDP is on central bank balance sheets now, with this bond buying and bond selling scheme to subsidize big government, to subsidize, with the Cantillon effect, asset prices, where you have real estate prices in certain cities here in the US for home prices going crazy while rents collapse. And then you have the S&P 500 over 4,000 for the first time. The Dow was well over 33,000. I think it was over 34,000 in the last couple days. And the NASDAQ is over 13,000, all at all-time highs. Insane. While the real economy is not doing well, while corporations, the earnings bar is being talked lower, and analysts are even projecting with these potential corporate tax hikes from 21% to 28% in the US if it does actually happen, although that's going to be passed on to the consumer, and the consumer is the one who's going to get screwed with shrinkflation and stagflation and less goods and services for more dollars. But lower earnings should mean lower stock valuations unless you just put a higher multiple on. And this is the justification. Oh, we'll just put a higher multiple. So there's way more currency and credit the last 12 months, and it was already happening before the pandemic. Now there's just an excuse to do even more of it. Now there is lots more currency and credit chasing the same or fewer goods and services that are manufactured in the economy, and also asset prices. And that's the mess, the distortions you have with the Cantillon effect, where perfect example of this is rents in major cities in the US have collapsed in a lot of major cities, and home prices, people that can actually speculate on higher real estate prices, investors and speculators, those prices are soaring. And that type of distortion is another perfect example of the Cantillon effect. And then what do central bankers do when they get in trouble, when things don't go the way these central banksters want? They just change the rules. They just change the economic formulas. Stagflate, tax lie. As you can see there on the left-hand side of your screen, they're just going to discontinue M1 and M2. And what Ben Bernanke talked about in his November 2010 op-ed, promising the money supply would not go parabolic, because that would be very inflationary. Promising it wouldn't happen with the QE programs. And now, again, when the central bankers get in trouble, it's time to change the rules. And here we are. And a year or two from now, you're going to see the Bank of Canada and some of these other central banks, those numbers that you see there on your screen in the screenshots or the charts, they're going to be even more insane. So the Bank of Canada may own 60% of all the government bonds a year or two from now. And the European Central Bank balance sheet, they've already been buying over 75% of all the bonds that are supposed to be issued in 2021. But that's not enough. They might end up buying, 85, 90, 95, maybe even 100% of all the European corporate debt and all the European government debt. So they're not going to own necessarily every single thing, but they're going to own close to it. And that's how insane everything is getting. And this is all part of stagflate, tax lie, and the Cantillon effect.